Central banks, though you were never taught to question them, are actually the most powerful institutions. They rarely make headlines, they are not elected, and most people cannot accurately explain what they do. Yet, central banks determine the value of your money, the direction of your economy, and the worth of everything you have worked for your entire life. They can create wealth from nothing or wipe it out overnight. And the strangest part? They are not accountable to you. This is the story of how central banks became direct players in the game they themselves help shape rather than impartial referees of modern finance. It is a tale of hidden powers, financial engineering, and the illusion of stability. Once you understand how it all began, you will never look at your paycheck, debts, or savings the same way again. Let's go back to 1694. England was on the brink of bankruptcy. The crown had drained the treasury after an extremely costly war with France. The bank established at that time bore no resemblance to modern banks. It was not created to serve the public, but to cover the state's financial gaps and profit from doing so. This is the foundation of modern central banking. It was born as a lender to the state, not as a stabilizing force. Over time, this power only expanded. By the 19th century, most European central banks had adopted similar systems. They were privately owned, but endowed with special privileges. They had the authority to issue currency, control reserves, and act as lenders of last resort for governments during crises. In return, they gained extraordinary power, often without democratic oversight. In America, the path was far more tumultuous. The public harbored deep mistrust of centralized financial power. The first and second banks of the United States were both closed following debates over corruption and elitism. For much of the 19th century, the U.S. had no central bank, and the financial system was a chaotic mix of private currencies, speculative frenzies, and sudden panics. That is, until the Panic of 1907 erupted, a crisis so severe that private financier J.P. Morgan had to personally organize a rescue operation. In 1913, Congress passed the Federal Reserve Act, creating the Federal Reserve System. It was presented as a decentralized network of regional banks to stabilize the economy. In practice, however, it became a central authority with enormous power over interest rates, credit, and the money supply. Here, the story becomes even more complicated. The Federal Reserve is not a government agency. It is an independent entity composed of both public and private elements. Its board is appointed by the president, while member banks are privately owned. It is funded not by taxes, but by interest on government debt and fees charged to banks. Operating in the shadows of financial markets, it makes decisions that affect millions without direct voter input. So, who do central banks serve? Officially, the Fed has two main objectives: maximize employment and maintain price stability. Unofficially, its actions often benefit the very institutions it's supposed to regulate. During the 2008 crisis, the Fed didn't just cut rates. They printed trillions, bailed out investment banks, inflated asset prices, and guaranteed toxic debts. In 2020, they followed a similar approach, buying corporate bonds, injecting massive liquidity into markets, and deepening wealth inequality. The rich got richer, while everyone else was told to be patient. The reality is this: central banks don't just manage the economy, they shape it. They determine winners and losers. When rates drop, stocks soar. When tightened, markets crash. When money is printed, asset holders get rich. When rates rise, the working class pays more for mortgages, credit cards, and car loans. And while claiming independence, central banks are deeply intertwined with the financial system. Their leaders rotate through investment banks, policies often align with Wall Street interests, and the deliberately opaque technical language keeps the public in the dark. Today, central banks are more powerful and less accountable than ever. The Federal Reserve, the European Central Bank, the Bank of Japan, and the Bank of England are not neutral institutions. They are the architects of our monetary system. Since 2008, they have transformed the economy into something barely recognizable. Low interest rates became the norm. Quantitative easing, once unimaginable, became routine. Central banks printed trillions to buy government bonds, corporate debt, and even mortgage-backed securities. The result? Asset prices skyrocketed. Stocks, real estate, commodities. For those who owned assets, it was a golden era. For everyone else, it was inflation disguised as prosperity. Housing became unaffordable. Stock markets decoupled from wages. Living costs rose while savings earned almost nothing. Most people had no idea why. They blamed politicians, immigrants, or bad luck, but not the invisible hand controlling the money supply. The harsh truth: the modern financial system is designed not to free you, but to keep you in constant motion. Central banks grease the wheels of consumption, reward debt, and punish saving. They manipulate interest rates, control narratives, and move trillions with a single keystroke, all under the guise of stability. But the stability they protect is not yours. The rule is simple. When things break, the central bank always saves the system, not the people. The system, the banks, the asset holders, the machine. Look at 2020. The COVID crash triggered the fastest market collapse in history. Within weeks, the Fed injected over $3 trillion in liquidity. Stocks recovered. Billionaires doubled their wealth, but millions of workers lost jobs. Small businesses failed. Renters faced eviction. What was saved was not the economy, it was the illusion of strength. Balance sheets expanded, debt grew, dependence deepened. When central banks distort the cost of money, they distort everything. Pricing risk becomes harder. Saving becomes harder. Retiring becomes harder. Bubbles form. Crashes occur. Real wealth becomes elusive. And paper profits vanish overnight. Worst of all, most people don't even realize it. Student loan interest, savings returns, housing costs, they are all downstream effects of decisions made in rooms they can never enter by people they will never vote for. On paper, they are independent. In reality, they serve the system that created them: banks, markets, entrenched financial elites. The revolving door between Wall Street and central banking is not a conspiracy. It is a career pipeline. The language of central banking, academic tones, technical reports, and vague expressions, serves one purpose: keeping outsiders out. You are no longer an outsider. Once you understand how the financial system is structured and how central banks enforce it, you can start to reclaim control. Financial literacy is not just about budgeting or investing, it's about power. Understanding that money is not neutral, inflation is not random, and interest rates are political. Freedom requires understanding the system and stepping outside its traps. This may mean holding assets that cannot be printed, creating income streams independent of debt cycles, and rejecting the notion that prosperity comes only from growth. Because growth fueled by endless debt and constant consumption is a treadmill. The faster it spins, the harder it is to stop. So, what can you do? Start by seeing clearly. Central banks are not gods. They are players, and their tools, interest rates, liquidity injections, asset purchases, are not designed with your freedom in mind. They exist to stabilize markets, protect institutions, and preserve a fragile, debt-dependent economy. You cannot fight the system directly, but you can position yourself outside its reach. Diversify your assets, simplify your life and investments, reduce debt, own valuable assets, learn how money works, teach others, question mainstream narratives. When the next crisis comes,
And it will. The central bank will do what it always does: protect the system. Protecting yourself is up to you. History doesn't repeat itself exactly, but if you don't understand it, it will crush you all the same. Subscribe.